Hey everyone, it is Julie here with TipRanks. Is it time to buy the dip on these two beatdown stocks? Let's take a closer look. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at two stocks that have been beaten down lately and are in the red, but Wall Street analysts still remain optimistic about the stock's future. So we're going to take a look at these companies, what has been going on, and what has those analysts still feeling bullish. Don't forget to make sure you've downloaded the TipRanks mobile app so you can access the wisdom of over 8,500 Wall Street analysts on the go. Links are in the description down below. Now let's get right into these two stocks. First on the list today is Sunnova Energy. Their stock trades under the ticker NOVA and is currently priced at $9.11 per share. This past year, they have fallen 51% from highs of up around $24 per share, and a lot of that happening here in these last 6 months. In the last 6 months, they're down 44%. Sunnova is one of the leaders in the U.S. residential solar industry. Their operations include everything from installing rooftop solar panels to setting up the home power system and bringing in power storage batteries. They also back up their solar installations with repairs, modifications, and replacement parts available as needed. They now have a presence in 46 U.S. states and boast more than 348,000 customers on their books. But it has been a tough year for the company. They have had a string of earnings reports that have come in short of analysts' expectations, with the most recent being just last week on October 25th. In their third quarter, they reported revenues of $198.4 million. Now, this did grow 32% year over year, but fell a few million short from analysts' expectations. On the earnings per side share, we had a wider than expected loss of 53 cents. There were some highlights to the quarter, though, which included a better-than-expected future guidance. They're now anticipating $800 million at the midpoint for adjusted EBITDA, and they also added 37,000 customers in the third quarter and took several actions to increase corporate liquidity, thereby lowering their forecasted 2024 corporate capital need from $500 million down to zero. And of course, following this earnings report, we had plenty of Wall Street analysts reiterating their price targets. One of those coming in with a buy was Wells Fargo. The analyst noted that despite the Q3 shortfall, they found positives such as the robust future guidance and lack of corporate capital needs in 2024. He also highlighted Nova's sharp discount to book value even when high rates are considered. They expressed confidence in Nova's ability to adapt to stricter clean energy tax equity requirements under Basel III, a factor that contributes to the positive outlook. Another analyst at UBS also weighed in. They were impressed by the company's prospects for boosting their market share as well as their exposure to U.S. government support and funds, saying that in their view, the decline in the Nova share price, driven by near-term market growth concerns and rising rates, provides an opportunity on a 12-month forward basis. The Sunnova Energy stock has attracted 20 analyst ratings, coming in as a strong buy with 15 buys and 5 holds. The average price target for the stock comes in at $19.50, which would be a huge upside of 114% for this next year. Down below, we can see that Wells Fargo rating coming in with an upside of 76%, and that actually falls quite in the middle of our price targets here. Looking at the recent ratings on the low end, we have a 21% upside with a hold from Goldman Sachs and some high-end price targets up above 200%. And for our second beatdown stock, we're taking a look at Exact Sciences. Their stock trades under the ticker EXAS, and they're currently priced at $61 per share. Looking at this past year, they have grown 75%, so you might be thinking they're not beat down at all, but they've been cooling off quite a bit recently. In the last 3 months, the stock has lost 36% of its value. Exact Sciences is a medical tech firm that specializes in developing early testing technology for cancer screening. They are dedicated to improving cancer treatment and prevention through accurate and timely early diagnostic testing. They have a lineup of test kits for various cancers, particularly colorectal and liver cancer, and back that up with several tests designed to find predispositions in individual patients' genetics. The company has been marketing its Cologuard at-home colon cancer screening test since 2014, and they also have an Oncoguard liver test on the market. On top of that, they also have an Exact Sciences Oncotype test, which is a standard of care test for breast cancer. They've seen their revenue gradually increase over the past couple of years, and unlike Sunnova, they've had a string of better than expected earnings recently. The next earnings report is coming up soon on November 1st. In the after hours, analysts will be anticipating a loss of 47 cents per share, much narrower than the previous year. In the last quarter, they came out with revenue of $622 million, which did grow 19% year over year, and their loss per share of 45 cents came in 2 cents better than expected. In that second quarter, the company also increased their full year 2023 revenue and adjusted EBITDA guidance by $54 million and $63 million at the midpoints. But despite that positive report, the stock has been on the decline these last few months. One analyst from Piper Sandler thinks that this could make a compelling entry point. They said, with strong Cologuard growth and a clear path to 5+ years growth rates of above 10%, we think the pullback since highs in July represent a pretty compelling entry point. Over the next 3 years, we model adjusted EBITDA to end up at $518 million, but we think there could be upside to our estimates. We think the company will be only lightly impacted by macroeconomic factors or from regulatory factors. Following brutal market sell-offs in the lab space, we're picking what we see as the highest quality company in the space. Overall, Exact Sciences has 13 current analyst ratings, coming in as a strong buy. And that breaks down to 11 buy ratings and 2 holds, with an average price target of $103. That would be an upside potential of 69% from current prices. Down below, we can see the most recent ratings coming in. On the low end is one of our buy ratings, still with 31% upside, and that's actually our Piper Sandler analyst. On the high end, Citi is feeling quite bullish, with a price target with 112% upside. So that is a quick look at 2 stocks that have been on the decline recently, but analysts are still feeling optimistic about their future. Let me know what you think about these 2 companies in the comments down below. I always love hearing from you guys. Of course, please keep in mind these videos are never a suggestion to buy or sell any specific stock, just sharing what these analysts are looking at and providing some insight and entertainment, but please make sure you always stick to your own investing plan. Thanks so much for watching. Have a great day, and I'll see you back here next time.